Do you guys miss the days of 3% interest rates on a mortgage? Do you feel like you possibly missed your opportunity when people say that we'll never see that happen again? It's pretty annoying, isn't it? Well, the good news is you can still get a crazy low interest rate if you know where to look. This recently helped a client of mine secure a 3.75% fixed rate on a 30-year loan. So in today's video, I'm going to show you this powerful hack that can help you get a great deal too. And I'm also going to share a powerful tool that can make this even easier. And also, I'm going to show you a few other strategies that can save you a ton of money. But before we dive into how all this works, I want to show you just how much of an impact this can make on the kind of home that you're looking to purchase. If you're looking to keep your payment at $3,500 per month, right now you can afford a home like this one if you have a 7% loan. But if we move that rate down to 4%, you can supercharge your buying power and get into a home like this for the exact same payment. Right now, the most popular way to get a lower rate is something your lender's probably told you about, but you need to know it has its downsides. The first strategy is going to look familiar to you because every cable and internet company uses it too.
Cable guy!
And it works pretty much the same way. So you know when you sign a contract for new internet service, they give you a great deal for the first year, but then in year 2, the cost goes up a bit, and then in year 3, it goes up to what's gonna be basically your normal rate. Well, lenders can do this too. This is called a temporary buy down, and it's basically where the sellers of the home and your mortgage company play the part of the internet provider. The sellers will provide a credit to you at closing that pays you to give a temporary introductory rate on your mortgage. Then it goes up a bit in year 2 before hitting your normal fixed rate in year 3 and beyond. Now, even with interest rates hovering in the high 6s, that could still possibly get you down into the high 3s. At least for the first year. Let's say the seller has their home listed for $700,000 and instead of taking money off for the purchase price, instead we ask for $25,000 in concessions. Now these concessions are going to be used to buy the rate down on the front end of the transaction. Now it's not perfect, but it's a great way to ease into a higher mortgage payment. Plus, if rates happen to go down, you can always refinance into the lower rate, keep any extra money that the sellers use to buy your rate down for you. Now I have a useful sheet from one of my lenders where you can plug in your own data, play around with the numbers, and from here you can see what you'll save with some different scenarios. Now what if you wanted a low rate like forever? Well, there's 2 ways you can do that, and one way will save you more money than the other, but it's also a bit harder to get, so let's go ahead and take a look at the easier option first. Let's take a look at new build communities. Home sales have been really slow for these guys for the past couple years. They're used to selling homes like hotcakes back in COVID, and they're trying a lot of things to get the rates down for buyers so that they can sell more houses. Now, just about every builder is offering a credit towards closing, which can be used for a rate buy down. But some of these builders are going a level above that. The larger builders actually all have their own lending companies, and some of them are using these to pre-purchase a block of loans and buy the rates down permanently for buyers. This is called a forward commitment, and it costs a ton of money, but it also allows them to move their inventory faster so they can actually make more money more quickly. Now the question is, how do you find out about all these incentives without going to every community? Well, one technique is to subscribe to every builder's email list and then get bombarded with an overflow of information like I do every single day. Or you call your realtor and you task them with finding out this information. Some of them may know this offhand. And while it's usually a little bit difficult for the consumer to get a hold of the actual sales rep, most real estate agents actually have them on their speed dial. They can get this info very quickly. But what about the other method, the one that's harder to get? This is going to give you the most bang for your buck by far, and it's also going to give you a rate under 4%. But the flip side is only a few homes will actually qualify for this, and finding them can be a little bit tricky. So this stems from back in the housing frenzy a couple years ago. People often bought their homes sight unseen, and it's not really surprising that lots of them regret their purchase now. But the good thing for you is that most mortgages on these homes will be in the 3% range. And if the situation is right, you can actually step in and take over that loan. You may have heard this. It's called an assumable loan, and it's only available if the loan is a government-backed loan, meaning it's something like an FHA loan, a VA loan, USDA loan, for example. But why does this seem so elusive? Have you ever actually met somebody that's done this? Well, I have. Now, one thing your realtor may have tried for you in the past is to create a filter on the MLS, which is not very reliable because most realtors don't fill out the MLS correctly. And if you did find a home, how do you know what the balance of the assumable loan is? How do you know what the rate is? Sometimes I'll get clients that will send over a Zillow listing saying that the loan is assumable, but there really hasn't been a friendly client-side portal to help you. Until now. Every day, new homes with assumable loans are coming onto the market. With our site, you can view almost every property with an assumable loan in a few states, including Arizona, California, Colorado, and Minnesota. We're adding more states every month. This website will help you navigate a ton of properties, all purchasable with a down payment and a loan assumption. Navigating through this site, you'll see certified assumable properties are orange. These are vetted properties where the real estate agent and the homeowner are open to an assumption and they've discussed it. These other properties aren't officially certified, which simply means that the agent and the homeowner may not know it's assumable. However, it's our job to educate these realtors, educate the homeowners, and see if they would be open to an assumption. Assuming a loan with a low interest rate is like hitting the jackpot. It allows you to afford a much nicer property, but the process of obtaining these assumable loans has its pitfalls. And you'll need to learn all about them if you're going to cast your net into the assumable home river. Watch this video right here to learn about all the mistakes I made in my first attempts to have a client assume a loan and how you can avoid them and snag the home that you didn't think you could afford.